Good morning. I'm Chris Swift, sitting in for Marlon Bowling this morning. Welcome to Market Day Report. Got a little soft market starting out this morning, and let's take a first look at our exports real quick to see kind of what they did and if there are any issues that we see from there. We see our corn market, 734,000 metric tons. That was down about 49% from last week. The soybean market was up 38% in their exports. Meal and oil were a little bit lower, with wheat down 7%. So let's see how that's taking out our corn board this morning. And our prices here this morning, corn a little bit softer with the July contract down 7, 5.94 even. And the new crop December down 5 3/4 at 5.37 3/4. Those are new lows in the December contract. For the soybeans, a little bit softer too. July down 6, 14.08 3/4. September down 7 1/4, 12.80 even. And November down 6 1/4, 12.60 1/2. Going to Chicago wheat. Down 10 1/4 on the July, 6.31 3/4. December down 10 3/4, 6.61 even. And Kansas City wheat down 13 1/2 on the July, 7.69 3/4. December down 12. Probably the more interesting commodity market that we have right now, with it having been planted into a drought. We grew it in a drought. We froze it at the best stages that it could be at. The crop progress report reflected that, and we still continue to trade lower. So really an amazing feat of either how much wheat there is out there or how improved that this wheat crop could get. Spring wheat out of Minneapolis got July down 12 1/4, $8 3/4. Looks like we're kind of on the verge of losing that 8 handle. December down 11 at 8.11 even. And I would like to take this moment to welcome our guest in, Brian Hoops. Brian, we certainly do appreciate you joining us here this morning. Brian is with Midwest Market Solutions. So good morning to you.
Good morning, Chris. How are you doing this morning?
Very well, sir. We have got a lot of market activity, and unfortunately, a lot of it is red this morning. Do you think those export numbers are something that might have impacted that price this morning?
There's certainly nothing there that's going to help out our prices whatsoever. And I probably jinxed it. I was talking with Marlon on the radio program yesterday, and I made mention that we're probably lucky we haven't seen any additional corn cancellations yet. And this morning, well, we saw one this morning. 233,000 metric tons of corn that we previously sold to China was announced as being canceled. So second, we haven't had any private sales this week. In fact, that's the second announcement of a cancellation that we've had. And then these export numbers, they're just pretty dismal all the way around. Corn, soybeans, wheat, all those numbers were a disappointment. And one of the big takeaways is China noticeably absent from any purchases of soybeans of the U.S. or from corn. And a lot of this is falling on some of the smaller Asian countries as well as Mexico. And that's why we're just seeing very minimal sales at this point in time. Brazil's corn crop is being harvested, undercutting our U.S. exports. It's happened in the soybean market, and we've seen just a real tremendous drop here in values of both the corn and soybeans, despite tight basis levels here in the United States.
Oh, absolutely. Brian, I hate to put you on the spot real quick, but do you see any kind of price level in the corn that might be supportive for some of these farmers to look at and maybe see a rally from?
That's a great question, and it's a question we get asked every day. Really, how low can these markets go? Well, as we saw in crude oil, it can go negative. That was about 3 years ago last week that crude oil went negative $45. I don't think there's any way that the U.S. grain markets do that. But when you get the funds stepping in here and selling very aggressively, who knows how low they're going to press it. You were talking about the wheat market. Yeah, you're talking about the wheat market earlier. We froze the crop. We planted in a drought. It's been torn up in the western part of Kansas. Yet it rained a little bit in southern Kansas and 1.5 inches in western Kansas where there's no wheat, and the market just continues in its free fall because maybe the funds don't care or they don't realize that the wheat crop is gone, and it's not going to come back in some of those areas.
Yeah, no, unfortunately, when they recognize that, it'll literally be a straight up shot from there. So, Brian, We're going to take a break and take a little commercial break here. So, Brian Hoops out of Springfield, Missouri. We'll be right back with you. And welcome back to Market Day Report. We're going to take a look at our livestock from overnight or from yesterday and see what they all closed at, and then we'll go and talk to Brian a little bit more. The June fat cattle up 55, 164.57. August up 45 at 163.40, and October up 45 at 167.42. Looking over at our feeder cattle market, we ended the day yesterday up 60 on the April, which expires tomorrow, May, up 85, 210.57, about $9 from where the index is right now. And August up $1.45 at 230.95. Taking a peek at our hog market that was up tremendously yesterday, $1.40 in the May at 78.27, June up 3.22, 90.27, and July down 267, up 267, 92.52. I'd like to welcome Brian Hoops back in this morning. And Brian, looking at the hog market real quick there, we know that we've been beaten to death off of it. What was yesterday's spur to it? Did the export numbers, I know we had an increase in the export numbers for hogs. Could that have been what spurred it?
I think it was mostly technical action yesterday. We had made contract lows earlier this week, and we kind of held those lows on Tuesday and started to see a little bit of short covering off of that number. And then yesterday, we made new highs for the week, ran some buy stops. We took out last week's highs, ran more buy stops, trade above a moving average, 21-day moving average for the first time since very early March. Again, ran more buy stops until we were 300 points higher. And this is kind of an example, I think, for grain traders. At some point in time, we'll find a bottom, we'll kind of trade sideways, and all of a sudden we'll start to move higher on short covering or get above a moving average, and we'll find all kinds of buying interest and buy stops once again. Now, the export sales that were out this morning, that was the bright spot for pork, marking near high for sales and both for shipments as well, both marking near highs this morning. China was not a big buyer, but we had enough other countries stepping in and buying, especially Mexico, that it pushed us into that contract high or marking near high territory for our exports. So, good fundamental news on top of some technical action, but the key is, can you have follow through buying and push this market back into an uptrend?
Right. Well, and I know that export number is really big to us, and we've seen multiple quarters now with the hogs and pigs report showing lower and lower production. So maybe we're down to a level where we can begin to support with the export and our lower production out there, begin to boost those prices up just a little bit more. Brian, I certainly do appreciate you taking the time to come on with me this morning. It's been a pleasure. Brian Hoops out of Springfield, Missouri, Midwest Marketing. Thank you very much.